What is going on, everyone? Welcome back to another video. Hope you're all having a great day. Please, please, please do consider subscribing if you have not already. I really do appreciate it. I see how many people have subscribed lately. Go check out my other videos too. I have automotive videos, which is how my channel originally started out, but I've also been making a ton of stock analysis and Bitcoin like news kind of videos. So I hope that you do go enjoy those, and let's get right into this video. So today we're going to look at Palo Alto Networks, and as of the close of market yesterday, Friday, March 26th, 2021, it was $319. And as we can see, it's a strong buy based on 26 analyst ratings, 24 buys, 2 holds, no sells. This is a very, very, very strong conviction kind of stock that a lot of people clearly see some upside in. Whether that's actually, a 40% almost upside to $446 price target, which is like the average, that remains to be seen, but nonetheless, it seems like it's going to go higher than where it is right now. And a stock analysis, again, is one of those outperform. It's an 8 out of 10. That's a pretty good indicator right here. This is how bullish people are, and this is how good people feel about the Palo Alto stock. Let's get right into the income statement. So as we can see, their fiscal year ends on July 31st, and in 2020, their revenue has slowly been growing, consistently growing, and with a lot of tech companies we've seen over like a 4-year span, it's basically doubled in 4 years. Imagine that. Imagine 1 year, you're a company and you make, uh, 100 million in profit, and then just 4 years later you're making 200 million. Like, you double your profit within 4 years. Not many companies can say that. Again, this isn't profit, this is just top line revenue, but even still, that's very impressive to get those kinds of sales figures in a 4-year span, basically doubling where you were. So let's look at, they had 3.4 billion as of July 2020 in total revenue, and their total net income is still negative. They've never earned a profit, and maybe they will soon. But this is, again, it's a growth stock. It's a tech growth stock, and they're in the whole cybersecurity, cyber network kind of business, and I'm sure they've had to, we'll look deeper into it, but I'm sure they've had to invest a lot in infrastructure, in trying to turn all employees remote, and trying to keep up with the trend, which is a lot of companies now have to be on board with hiring cybersecurity places like Palo Alto Networks, so that way, with more people working from home, more people on a work computer from home, they're secure. So let's look at the balance sheet now. This is as strong a balance sheet as you'll see for a tech company of this size. They've got about 2.9 billion in cash on hand, and total current assets is about 5.1 billion. That's huge. Look at that, 5.1 billion. This isn't like, this isn't like a Cisco or a Dell or something like that. This is, a small enough company that like 5.1 billion is a lot to have on hand for current assets. And so if we actually see total current liabilities is about let's just say about 2.7 billion. So they've got double the total current assets compared to total current liabilities. And that's good. That's what we like to see. That's a good, strong foundational, strong foundation of financials. They've got a good CFO at this company, clearly. And again, I don't know who the CFO is. Total long-term debt, this is kind of concerning. It's basically doubled from 2019 to 2020. That's not what we want to see, and it's consistently grown. They should really, start to pay down that more, and we'll look when we get to the cash flow statement how much debt they're actually paying down. But we don't like to see that. That is a negative. That's a negative mark on this, is they've doubled their debt in a year. That's not what we want to see. We want to see that going down, and we want to see this figure very low for a strong, sound tech growth stock. Like, we don't want to see this. So if we look at the cash flow statement again, always starts at the top with net income. In this case, it starts with the net loss. And if we go down and we see, looks like they did some acquiring over the last year. They've done, it looks like year or two, it looks like they've done about 1.2 billion in acquisitions. So they have bought up some companies. They have been buying up their investments. And if we go down here, we can see that yes, they did issue in 2020 almost 2 billion in debt. They rarely issue debt, so again, that's how we have these high figures. And they also barely repay it. That's not good. We want to see this being paid more. If you have 5.1 billion in total current assets on your balance sheet, why hold this much in debt? Unless you're getting like a super low interest rate, which is probably why they did it in 2020. They probably got a low interest rate for the debt that they financed, and I'm just taking a guess at that. It's just a stab in the dark. So anyway, they don't really issue debt, but they also don't really repay it. They should have actually repaid some of that too. It's okay to issue debt and then start start paying it down. Like when you buy a house or buy a car, obviously you're taking out a loan, but you're also repaying that debt back, and you could choose to pay back more than you actually, owe as a payment every month, if you choose to. So they definitely are in a position to, and they probably should have, to be honest. And we actually can see that they don't really issue a whole lot of they don't really issue a whole lot of new shares, but they do buyback. Wow, look at that. That's actually, one reason why they probably have such a high share price is they bought back during the pandemic in 2020 almost 1.2 billion in their own stock. So that's clearly a big deal, and that'll definitely drive the price up, and that'll give them, a better opportunity to later on issue more equity at a higher price based on where it is now, especially like we saw at the beginning on the tip ranks. If this company is only expected to go up, their share price, buying back more shares right now when it's still low is a great financial move. So we still like the CFO. We don't know who they are, but we still like them, and it seems like they're off to a good start. They should probably not issue as much debt, or they should, pay back a little bit more than they're issuing in a monthly payment or annual payment. Either way, they should probably be buying back a little bit more debt. But that's a good thing to see. So they do buy back their shares. They are, shareholder conscientious. That's a good thing to see. In their cash flow statement, it is cash flow positive. So that's a good thing too. Now let's see if we were to have invested in Palo Alto Networks on its IPO in August 2012, but the data is actually from January 2013. So it's about, it's about 8 years worth of data that we have. If you had invested $10,000 8 years ago in Palo Alto Networks at its IPO, you today would have about $66,000. That's not too bad. 26% compound annual growth rate. That's definitely not the best, definitely not the worst. That's a pretty good balance to see. That's what we like. That's not bad at all. And if we actually look at the annual returns that they have, we can actually see that they've only lost in 8 years. They've only had a negative return 1 year, and that was in 2016. Even 2018, which a lot of tech stocks got crushed, they actually came out almost 30% on top. So that's pretty good. 2018 was a bad year, especially towards the end of the year for a lot of companies, especially tech. So that's a really good thing to see. And again, 1 year out of 8 years total, which were bad, is not too shabby. That's nothing to sneeze at, really. And basically, just 1 year out of 8 was single-digit growth. 2021 is yet to be seen, but basically double digits for, let's just say, 6 out of the 8 years, basically. So anyway, I hope that you guys did enjoy this video. If you own Palo Alto Networks, let me know. What do you think about it? And yeah, just do consider subscribing and liking the video. See you soon.